It's not a great week for U.S. stocks either. The Federal Reserve rate hike on Wednesday led to a deep sell-off in U.S. regional banks on Thursday. Now the fear is that another financial shoe may soon drop. Which bank will collapse next and when are the questions now, and not if anymore. Stocks of U.S. regional lenders such as Western Alliance Bancorp, PacWest Bancorp and First Horizon slumped on Thursday. Western Alliance and PacWest dropped over 60% before recouping some losses. First Horizon tumbled as much as 45%, its biggest intraday fall since the 2008 financial crisis. Multiple other lenders, both large and small, were caught up in the panic. All of this demonstrates how market anxiety persists after a series of bank failures and deposit outflows. Investors are sounding the alarm that banking sector pressures are far from finished. In such a stressful scenario, some lenders have been trying to assure investors with little to no avail. That despite reassurances from Fed Chair Jerome Powell that authorities are getting closer to managing the issue.
We like and feel confident about the Fed stepping in to create some backstop for the regional banks post the Silicon Valley Bank episode. But yeah, there's certainly, probably some more weakness to be seen in the sector as time continues to unfold.
Let's now look at why global central banks are being blamed for the banking crisis. Overall, major economies have raised rates by a whopping 40% combined in the current tightening cycle. The Fed has raised rates by 5% over the past year after openly dismissing rising inflation as transitory in 2021. But central banks' rhetoric in recent months has been the need to control soaring inflation. So it is clear major central banks were late in tightening policy to rein in inflation. They failed in their primary job of price stability. The aggressive pace and the jumbo-sized interest rate hikes make it clear major central banks panicked because it takes at least 2 quarters for a policy decision to transmit into the real economy. And as they were reacting rather than being proactive, they lost control of inflation. Now fears of a harsh recession have been reinforced by a roaring sell-off in regional banks. As such, many analysts predict central banks will take their knives out before this year's end. Traders have increased their bets on interest rate cuts from the Fed, with the first rate cut now expected to come as early as July. If that does not happen, or if that does happen, then the latest rate hike cycle will be remembered as the biggest policy mistake in history of central banks. WION is now available in your country. Download the app now and get all the news on the move.